Hey everybody, I hope everyone is doing well and had a good day. And in this video, I'm going to review the trades that I took on Wednesday, December 17th, 2025. And I'll also share a couple of thoughts I have on system development in general. And also I'll talk a bit about Al Brooks' price action theory. So actually, before I get into the trades, I want to talk a little bit about price action theory and what I've learned from Al Brooks. And as I look back, one of the problems with studying the Brooks trading course, reading the books, going to the live trading room webinars, or if you're studying Ali and you're doing Systems Academy or Trade with Me, whatever you're doing, there's just so much information. Like, there's no doubt about it that there's a lot of information to absorb. So I think the first problem that we face is that there's a lot of information. And because of that, when you're new, there's going to be a lot of ignorance. You just don't know. And that ignorance leads to confusion. When there's ignorance and confusion, usually what follows is worry or doubt. And typically you're going to be in a state of anxiety, especially when you're trading. If you can relate to me, I spent a lot of time feeling pretty ignorant, feeling anxious as a result of my ignorance while trading. And the most important thing I've learned along the way is that the anxiety that you feel is nothing but the result of your ignorance, and that ignorance can be replaced with knowledge through study. But I said it's a lot of information, so you have to be committed to, this could take 6 months to learn, this could take several years to learn. You have to be in it for the long haul. Why am I mentioning these things? Well, one time I heard Al Brooks in the trading room say that trading is simple. And it bothered me for a long time to hear that trading is simple, because I felt so lost. I wasn't doing well. And I thought, how could it be simple? Am I that, I felt stupid basically. And I thought, how can I not figure something out that's so simple? But with time, my perspective has changed, and I can actually relate in a different field. The way I'm going to relate it is with a Rubik's Cube, because I got a Rubik's Cube when I was young, probably about 5th grade, and I was interested in them. And I learned how to do one many years later. It wasn't until many years later that I actually learned how to solve it, and then it would take me like 2 minutes to solve. And now it takes me about a minute to solve, maybe 40 to 60 seconds to solve it. So when I think about a Rubik's Cube, I no longer think of it as this immensely challenging, complex thing. It's just basically a set of algorithms. Or, I look at it and I think, yeah, or I'll say this for the purpose of being dramatic, that there's basically an infinite number of possible combinations in a Rubik's Cube, which sounds complex and confusing. But the reality is that any person can learn just a handful of algorithms and then be able to solve it, no matter how it's scrambled, in just about a minute or so. It doesn't take anything spectacular. And my mind has changed about that too, because I went from thinking only really smart people who can see things that I cannot see can solve a Rubik's Cube, to being someone that can solve a Rubik's Cube. And now I think it's not really impressive at all that I can solve a Rubik's Cube even in 40 seconds, because there's people doing it in like 5 seconds. So I wouldn't call it challenging, but I also wouldn't call it easy. And I know that most people probably can't do it. And then I'm relating that to, you think about Al calling trading simple, and it's like, well, of course, he's been doing this at the time for 30, 35 years. So it's possible that Al has forgotten to a degree what it was like to be in the losing camp. And I say it that way because he wrote that in the book. In one of his books, he wrote that one of his trader friends thought that the average beginner should be able to make 6 points a day in the evening. And he meant it. And Al went away from that conversation thinking, there are traders who have been successful for so long that they have forgotten what it's like to be in the losing camp. So Al saying that trading is simple, there's a degree of truth in that you just kind of forget how much you struggled. But I think it's also fairly true that I personally overcomplicated it for many, many years. And so I'm trying to nudge everybody to do, because it worked for me. I started out as a day one beginner, so it doesn't matter if you've been trading for 0 days or 10 years. I'm sharing this because I think anybody can benefit from it. If you take the time to really study price action breakouts and understand the underlying market behavior responsible for the price action, and you learn to align yourself with those laws, for lack of words, I think of it as laws that govern price action, like natural laws or universal laws. If you can align yourself with the laws that govern price action, then you're going to be successful. But in order to do that, you need to study and you need to create order in all of the confusion. And I don't want to get too much into that in this video. I'm just touching on it. And to talk a little bit about price action theory, one of the things that we've all learned from Al Brooks is that you think about, if a trader manages a trade correctly, they should make money or avoid a loss 80% of the time. And traders read that, I read that over and over and over, but I didn't really understand what it meant. But when you really understand what it means, when you see it in price action in live days, you see it in practice, you can really see what Al means by that. I'm going to give an example through here. If we're taking a simple approach of trading breakouts in second legs, let's just go bar by bar from, maybe the start of the channel over here. And what I'm sharing is not necessarily my trading system. And just quickly before I get into this, my trading system is not my trading system. And what I mean by that is I'm standing on the shoulders of giants. Like I never would have ever been able to do this without the content, the resources that were provided by Al Brooks, Ali Moin Afshari. I had personal contact with Brad Wolf from Systems Academy. And then many of you probably know Trader5959, also known as Jacob. Him and I went to college together, and we studied Brooks price action together for many years. And what I'm trying to say is that this doesn't belong to me. It doesn't belong to Jacob. It doesn't belong to Al Brooks even. Price action just exists, and it's governed by universal laws. And if we can understand those laws and align our behavior with those laws, then we have a trading system that works. So I'm trying to share ideas that have worked for me, but they're not my ideas. They're just things I've learned along the way. So with that said, I want to talk about the breakout signals here since bar 19. And I'll talk, basically everything that I'm going to talk about is based on Al Brooks' price action and also Ali Moin Afshari's breakouts research white paper. Look at bar 19, bull breakout bar. But do you really want to buy bar 19 after you see his bear breakout? No, it's probably a minor reversal at best. So if anything, you're short and you're looking to sell, but you probably should not be buying here. The bears need a second leg down. Therefore, selling the close of any of these bars, maybe you wait for the breakout or follow through. 14, selling 15 is reasonable, selling 17 is reasonable. Minor reversal, bears getting a second leg. Bar 21, still reasonable to sell. And let's, again, try to make it as simple as possible. You see a bull breakout, you buy, you look for a second leg. See a bear breakout, you sell, looking to capture a second leg. 19 is filtered out, so there's no buy. 21, in the direction of a strong trend. Leg 2, strong breakout bar, sell the close, scale in, you're probably going to get a second leg. So you sell the close 21, you scale in, you get your second leg. You get a 1R second leg. From the high of 21 to the close of 21 to the highest point of the pullback, market retests the original entry price, and you can profit on that trade. Another signal, 25. Maybe it's leg 3, but even if you take it, sell the close, scale in, you make money on the next bar. And then maybe you don't take 26. Maybe you do take 26. Leg 3, sell the close, scale in, you still get your second leg. 20, another signal, but a late leg. But let's say you sell the close, scale in, you may have gotten an immediate second leg. Measure move down. Bar 30, wedge bottom. Strong enough reversal, you're probably going to get a two-legged correction after the wedge, but minor reversal at best. Okay to buy and scale in, but looking to scalp out. So bar 30, you can buy, scale in, you still make your second leg. Outside up, breakout, follow through, 35. Not ideal, you're at resistance. Resistance somewhere around here. The market reacting to this price as resistance. Every time we get to it, we find sellers. Test it again, we find sellers. Test it again, sellers. Test it again, probably sellers. And this one's probably filtered out, but even if you took it, you can buy the close, scale in, you still got your second leg. 36. Bear breakout, top of a trading range or bear channel. Sell the close, scale in, you get your second leg. 38. Bear breakout, leg 2, but still near the top of the channel, the trend line. You can sell the close, scale in, capture a second leg. 39. Maybe you filter it out, 3 consecutive sell signals in the same direction, so maybe you just filter out 39. 43. Probably filtered out. A couple different ways to look at it. To me, it's a late leg. 3 attempts to go up, head and shoulders, bear flag, basically. Testing resistance in an area where traders got trapped. Bulls buying got trapped into a losing position. That creates resistance. So 43, filtered out. Doesn't get a second leg. 45, maybe filtered out. It's a late leg. You can count several legs down to 45. But I remember seeing 45 in real time. And this is where I'll talk about what I actually did. I remember seeing 45, bar 45 in real time, thinking I want to sell, but I'm not going to sell because it's hard to argue that that is not a late leg. And I filter out late legs, which means I don't take them. So 45 I filter out, but I want to call it, I don't know what I want to call it yet. This is what I'm trying to still figure out. Is it a leg count reset? Is it a late leg? Is it leg 6, but it's not filtered out for some reason or another? I'm trying to work that out. But the reason I thought it was a reasonable sell is because we have the spike and channel, wedge bottom, 3 or 4 legs down, a 2-legged correction, trend line break, retest, second attempt up. So you have your wedge, your two-legged correction, and this is possibly trend resumption. You have the strong breakout on the open, trading range. I'm expecting breakout, pullback, second leg. So rather than this being like a second leg trap low in a trading range or at support, I'm wondering, or I guess I'm leaning toward wanting to sell this because it might be trend resumption. Volatility expansion, volatility contraction, and then expecting volatility expansion to the downside again. So I'm still trying to work that out. 45, I filtered out. I did not take it. Another follow-through bar, 46, you could sell the close of that bar, probably capture second leg. Now, 47, this is a signal bar that I actually took. And I didn't love it. I actually would have preferred selling more. But it's an interesting signal because I don't think it's the worst trade in the world either. You're at support, you have several legs down, and this might be transitioning into a trading range. You might test the start of a channel, which may become the top of a trading range. There's room to the upside. What's the problem here? Low probability. You're in a spike and tight channel bear trend. Your signal bar is small. The distance to the target is very far, so you have an outstanding risk to reward ratio, and that means you must have low probability. I took the trade betting that even if there's a surprise against me, I should be able to avoid a loss or make money. Basically, the premise of, and I say this in air quotes, my trading system is that I should be able to make money or avoid a loss 80% of the time. But that's based on the laws of the universe that govern price action that Al Brooks and Ali teach. This is not like some secret system that I have. I'm just trying to do what everyone is trying to do, which is align my actions with law. If you ever heard Brad talk about the rules of the road in his end of day reviews, it's the same thing. We call it different things. He calls it the rules of the road, and I call it the laws of the universe, but it's the same thing. So 47, I buy the close. I'm prepared to scale in, just looking to capture a symmetrical second leg and take a scalp. 48, my entry bar is disappointing, so I'm thinking, okay, I don't want to hold for the full 1R second leg anymore at this point. I'm too concerned that the bears are going to get a second leg down, so I want to get out of this trade quickly. And I made a mistake, and I'm really glad this happened today because I've been wanting to share a mistake, a trade that's not a type 1 or type 2 trade. So signal bar 47, buy the close, scale in, looking for a half an R second leg at this point. So not a full leg 1 equals leg 2, where leg 2 is 1R. I'm looking for a 0.5R second leg at this point because 45 is disappointing to me. In the bear breakout, there's too much risk that the bears get a second leg down and that my stop gets run before my target of a symmetrical 1R second leg is reached. So I'm looking to get out of the trade fairly quickly here and just avoid a loss. I don't care if I don't make money, I just want to break even. 49 gave me the opportunity to break even. I'm going to try to demonstrate this. 1R is from the low of bar 47 to the close of bar 47. This top gray line is a 1R second leg. This is the 1R distance from the low of bar 49 to the high of bar 49. Basically, that's 1R. It's the same as the low of bar 47 to the close of 47. Breakout, pull back. I'm just looking for a 0.5R second leg. That's this middle purple line. So you can see bar 49 sold off to the low, then rallied back above its midpoint, which means if I had my limit order set at this midpoint, even if I bought the close here, scaled in, and then set my limit order to exit at the midpoint of all my entries, basically, or the 0.5R second leg, the market gave me the chance to exit the trade at break even. The problem, what happened here, and this is a learning lesson for me, and it's a couple of things. There's a couple of different layers of learning opportunities for me here. The first is that I was too slow in managing my orders. So 49, after it sold off, rallied to the 0.5R second leg target before I set my limit order at that price, so I was too slow. And then the market fell below that price again. So now I'm thinking, okay, I missed that first test, and I wasn't thinking that there's probably going to be a second test. I started to feel a bit of panic, and I was thinking, this breakout is probably going to get a second leg. The bulls are failing, and they just had their opportunity to break even. So now it feels like my premise is no longer valid because the bulls have had their opportunity to break even. So if they took it, they avoided a loss, and if they didn't take it, they risk having the market go against them in a big way. The lesson I learned, two things. The first is that I could be more focused and be quicker with managing orders, which just comes with practice. And the second lesson that I learned is that pay closer attention and watch how the market tests different prices, because it didn't just test that price one time. If I had just set my limit order there and then had been patient, the limit order would have been reached a second time. So I think that also comes with more understanding and experience, not getting that panic feeling that I've got to get out. And then in this case, the bulls actually ended up getting the 1R second leg, but I'm not interested in capturing the full 1R second leg. I'm happy to avoid a loss here in this context. Now, bar 50, outside down, late leg, filtered out. Still got a measured move. Bar 53, late leg, but tight channel, probably okay if you sell. Scale in, you're probably going to make money. So you sell 53, you scale in 54, make money on the second leg 55. Late leg, realistically, you're not selling down here. It's too many pushes down. Rather sell a pullback. So do nothing, 55. Market starts to pull back. And then bar 60. Now this is interesting because I was going to talk about bar 60. I trade the SPY, so that might be the difference. We're looking at the E-mini. Yeah, bar 60 on the SPY was actually a signal. And I think bar 60 is a reasonable trade to take. But this one, and I wouldn't call this a mistake, I just was not at the computer at the time. If I was here, I would have taken the trade. Sell the close 60, scale in, you're probably going to get a second leg. You get it one bar later. 61, also a fine trade to take. It's a second consecutive signal. You maybe call it leg 2. Maybe you even call it leg 3 because of bar 59. So some traders will filter it out. Others will take it, scale in, and in this case, they get trapped. And then here, 64. Do you buy 64? Probably not. Late leg, testing breakout points to the left in a bear trend. So if anything, better to fade. But if we're keeping it simple, if it's a bull signal, looking to buy, scale in, capture the second leg. Bear signals, sell, scale in, capture the second leg. And actually, I didn't even talk about 61 properly. 61 might be filtered out, but even if you took it, let's say you made a mistake and took it, if you managed the trade properly, you get a surprise against bar 62. So you take your 0.5R second leg, and you get it from the high of bar 62 to the low of bar 63. So you can avoid a loss even if you sold 61. Let's say you don't buy here, late leg, you don't buy here, still late leg. Like I said, you've got the bull channel line, you've got breakout points. Not ideal for buying here. Better, in my opinion, to wait for a sell signal. Outside down 67, there's your sell signal. Sell to close 67, leg one breakout. You will probably make money or avoid a loss if you sell, scale in, and then exit lower. Trade can sell, scale in, deep pullback, but no surprise against, weak breakout bar 70, closing below its midpoint. Bears get their symmetrical second leg. So that's all I had. Oh, and I took this trade. I forget if I said I did take this one. So I took just 2 trades today. And the first one I made a mistake on. I bought at 47. I should have been able to avoid a loss, but I took a small loss on that trade instead. I missed bar 60. That's a profitable trade. And I took 67, and that was a profitable trade. So that's really all I had to share for today. Again, I wanted to share this as kind of like a sample video. This is the kind of content that I put on my channel membership with trade reviews. But that's going to be it for the trade review for today. So I want to thank everybody for watching. And if you like what you see, if you want more of it, you can join the channel membership where I post more videos of this nature. But also, if you don't want to join, you've got the end of day reviews. And I'm trying to be more consistent with those as well. So the end of day review videos, those are always going to be free. So if you don't want to join or you can't join, don't worry about it. It's really not even necessary if you just, if you remain persistent and you really are trying to learn from your mistakes, stay positive, and try to align your actions with the laws that govern price action. And before you know it, you'll have a system. So thanks everybody for watching. I really appreciate it. And I hope everyone has a great night.